Good morning, my name is Christelle from France de Klerk, Independent Technical Analyst. Pepkor is the first one on our list today, and we can see that the share have had a beautiful rally to the upside, and now 20 Rand is a strong resistance. But that resistance was also around 20 Rand in the week of the 20th November, the 27th of December, as well as the 22nd of January. So for the last 6 weeks, the share has tested 20 Rand and kept it a resistance, tested 20 Rand and kept it a resistance. Only when 20 Rand starts to change into a support again, in other words, it becomes a floor, can I assume that the momentum to the top will continue. And then the next strong resistance is waiting at that high in the week of the 7th of November, and that is at 24 Rand. Assuming 20 Rand remains a resistance, we might be sitting here with an ugly double top formation. And that double top formation will only be confirmed when that neckline waiting at 16 Rand 80 changes into a resistance. In other words, the share starts to trade below it. Now, a double top, triple top, head and shoulder formations are all warning formations, implying that the top of the share might be in place. Now, very important, this second or that first loop, I do not count that as a confirmation of a loop. Why? Because the last two candles did not touch the neckline of the first loop. All right, so that 16 Rand 80 is the horizontal line I've drawn in there, but when it made that second loop, it did not go all the way back to 16 Rand 80. It went only as low in that week of the 3rd of June as 16 Rand 91. So there's the first loop, and I count that as my second loop. Now, the first sign of weakness will be only below the 40-week moving average, and that is waiting at 18 Rand 80. And below that level, also the long-term sentiment towards the share changes to negative. My stochastic indicator is overbought. It's sitting on an 88, but there's no sign of or confirmation of a negative divergence yet. A negative divergence takes place when that shorter moving average, the blue line, the KAP percentage line, starts to break downwards through the orange line, the D percentage line. And only when they cross one another do we refer to it as a negative divergence in overbought territory. And that is confirmation or an implication that we can expect the probability for downside might increase. Confirming that with a candle, we can then consider either a short or taking profit. So strong support and resistance levels have been identified in overbought territory. So that is an ideal place to consider taking some profit or to consider a short if you want to maybe use an opportunity on a CFD. Metair. Ticker on our exchange MTA. A beautiful cup and handle formation is visible. Now the neckline of that cup and handle is waiting at 13 Rand 82. That is almost at my 40-week moving average, which is waiting at 13 Rand 60, and only above that level, the neckline, 13 Rand 82, will the cup and handle formation be confirmed? And can I say that optimism is on the table and that the possibility is there that this cup and handle can take the share higher? Very important, we are above the 40-week moving average now, which tells me assuming the share can remain above it, the long-term sentiment will change to positive. Now we can see back here in January of this year, the share tested the 40-week. It could not change and keep it a support. It kept it a resistance. So a very critical level that needs to change into a support in order to sustain the momentum to the top. Now very important, the conservative target of a cup and handle formation is the length of the handle projected upwards, and that can take us back to around 16 Rand 77, and the full target of the handle of the cup and handle is the full length of the cup projected upwards from the neckline where the formation was confirmed. Only when the handle, which is the higher one of the cup or the handle, only when the low part of that handle, and that is waiting at 10 Rand 69, only when that level starts to change into a resistance again, can I say, listen, the optimism is now off the table and we can assume that the momentum to the bottom can continue. My stochastic, look at that, both lines are still pointing upwards. This is not an ideal place to start to accumulate, right? We want to start accumulating any instrument when it is oversold, when that stochastic is below a 20, when that elastic band, in other words, still has a lot of room for upside. And the best idea is once the positive divergence takes place, right? Once that blue line, the K percentage line, starts to break upwards through the orange line, that's when the positive divergence takes place, which implies then the probability for upside has increased. Beautiful cup and handle formation. Let's see if that 40-week starts to remain support, and then we can hopefully see a little bit of a bounce here in Metair before the share becomes completely overbought. KAP holdings, also very beautiful rally, but we can see the first candle that gave us a hint of profit taking was in the week of the 1st of July. That shooting star candle with the long upper shadow tells us that, listen, the high of that candle was at R3.28, but the sellers were so strong they managed to push the share all the way down to close at R3.02. And that was the first sign that there was some profit taking in overbought territory, right? Like stochastic was there at about an 80. Now, ever since then, there's lower highs on the upper shadows of the candles, which also implies loss of momentum. And this candle in the week of the 8th of July is a beautiful example of a spinning candle. Both wicks or shadows or on either side of the real body is almost the same in length. That implies indecision. It tells us that the buyers and sellers are not sure what they wanted to do with the share. And ever since then, it's just been consolidating sideways. So only above the high of the week of the 1st of July, and that is at R3.28, only above that level can I assume again that the momentum to the top will continue. And below these lower shadows at R2.80, which is clearly a strong support level, 3 touching points there. Only below R2.80 will the first sign of weakness be confirmed, and can I say, listen, the probability or the likelihood is there that the profit taking to the downside can escalate. Very important. Look at my stochastic. We're starting to see lower highs, right? The blue line wanted to try to give a bounce there, but not quite as high as that 80 level. And started to lose momentum. Lower highs also implying loss of momentum, confirming what is happening in the candles, obviously. So R2.80, sign of weakness below that, and only above R3.28 can we assume that the momentum to the top can continue. The share is coming from a very low base, and we can see that there is a possible inverse head and shoulder formation here with multiple right shoulders, long consolidation bases, but we can see maybe a little bit of a pullback, some profit taking, maybe keep that tested 40-week moving average, which will be very positive, and the share manages to keep that as support. This inverse head and shoulder formation can then take the share back to higher levels. I'm trying to see if there is maybe a nice window at the top and that can act as a target. Doesn't look like it, but a long consolidation base or an inverse head and shoulder that can take the share higher should that 40-week moving average remain a support. Again, not an ideal place to buy the share when the stochastic is in overbought territory or coming freshly from overbought territory. So wait for the proper decent pullback. Wait for the share to be completely, rested in oversold territory, and then maybe try to accumulate. Then combining that with a positive turnaround candle or pattern. Uber was the next one that was requested here, listed obviously on the New York Stock Exchange. Beautiful rally, has treated investors so well, but what are we seeing now? An inverse cup and handle formation, and I'm going to draw that. Inverse, in other words, negative, with a cup and a handle formation. And only when that neckline, I'm going to give that level now, starts to change into a resistance, will the negativity around, and that is waiting at $63.37. Below that level, the inverse cup and handle formation can spark more profit taking the share lower to levels around 56.77 and even there 49.23 where that strong resistance was in July 23. Very important. Look at this. My stochastic has not even been overbought yet, and there's a negative divergence in mid-zone. That is very negative, ladies and gentlemen. That means there was not enough buying interest to even get this share in overbought territory. In other words, there was not enough, buying power even to get them into the semifinals. I mean, the stochastic is losing momentum way before that, and that is seen as very, very negative. We can see that the share is at a critical level, that red line, which represents the 40-week moving average. And below that, the long-term sentiment changes to negative. But we can see that the 40-week moving average was tested a couple of times in the past, and that was the support that gave the share a bounce. So it will be very important to see what does this share do now with the 40-week. If it starts to change it into a resistance and keep it one, it will be seen as very negative, because then it basically take the share back to the sentiment gauge mid-year of January 23, where it could not find enough buying power to get it above the 40-week. So let's see what it does when it gets there below $66.92. My inverse cup and handle formation will be off the table. The warning will be off the table when the top of the handle, and that is based in last week's candle, that high waiting at $75.40. Only above that level will the warning of this inverse cup and handle be off the table and made incomplete. All right, Domino's, a pizza favorite in the Americas, and obviously massive sell-off last week, down more than 17%. It is oversold at the moment, but no positive divergence yet, right? That blue line has not broken upwards yet. So I would wait for the share to confirm that it's not making new lows. This week is a little bit of a positive candle, a little bit of our Rami, not enough yet. Remember, that candle will only be finished by Friday's close. These are weekly graphs, so via the textbook methods is you should wait for that candle to finish on Friday and then make the decision on the Monday. So now the first sign of strength will only be above this week's high, which is $419.04, and then below the low, which is $401.30. Below that level, we can assume again that the momentum to the bottom can continue, and above $419 we can assume to see more upside. But it's still fresh. The candle is not completely finished yet. So see what it does, and then obviously we are below that 40-week moving average, which is seen as very, very negative, and very important for a little bit of a longer term view. The high that was kept a resistance here at $537 is lower than the high year back in December 21. At $567. So that is also a negative for those who might have had Domino's for a longer period, implying lower highs, which is always a sign of negativity or loss of momentum. Don't forget to send through your requests for next week's show, either via Twitter or email us at admin@fransdeklerk.com. Have a fantastic week. Take care.